Let me tell you a true story. A guy I know, let's for the sake of it, just call him Mike, worked his entire life doing everything by the book. He saved aggressively in his 401k and his IRA. He never spent recklessly, and he dreamed of retiring comfortably at the age of 65. Now, Mike was convinced he had won the retirement game, but then reality hit, and it hit hard. So the first year of retirement, he started withdrawing from his tax-deferred accounts, expecting to live comfortably off the six-figure savings that he'd worked decades for. But guess what? Almost half of his money vanished into taxes. And Mike? Well, he was shocked. He had no idea that deferring taxes for 30 plus years meant giving the IRS a golden opportunity to take more of his money later. His biggest mistake? Well, thinking he would be in a lower tax bracket in retirement, because here's the reality that no one ever explains. By the time you retire, you could very well be in a higher tax bracket, not a lower one. Social Security gets taxed once your income crosses a certain threshold. Also, the required minimum distributions, or RMDs as they're known, force you to take money out even if you don't need it, and that pushes you into a higher bracket. Now, if tax rates rise in the future, and history shows us that they will, you could lose hundreds and thousands of dollars to Uncle Sam. So let me ask you, do you want to keep your hard-earned money, or would you prefer for the government to decide how much of it you actually get to keep? So before we take a deep dive in this subject, it's imperative that you hit that like button and subscribe so that you get notified the minute we produce another game-changing video that affects your finances. I promise you, you'll appreciate it. Now, buckle up, because what I'm about to share could save you an absolute fortune. So let's be real. We've all been told exactly the same thing. Just max out your 401k and your IRA, and that's how you build wealth for retirement. But, whoa, let's break it down logically. So what does tax deferred actually mean? Well, it means you're saying to Uncle Sam, I'll pay you later. But when later comes, you don't control how much you'll pay. So here's a quick history lesson on taxes, and I promise this will shock you. Right now, tax rates are historically low under a Republican administration. But will they stay this low forever? Not a chance. So check this out. In 1944, the highest federal tax rate was 94%. Yes, you heard that right, 94%. In the 70s, the highest tax rate was still 70%. In the 80s, it hovered around 50%. Fast forward to today, and the highest rate is 37% for now. But with record high government debt and talks of future tax hikes, it's not a matter of if taxes go up, it's when they go up. And if your entire retirement savings are locked in a 401k or an IRA, well, you're rolling the dice with your future tax bill. So what's the solution? Well, it's called a strategic rollout. So instead of waiting until tax rates rise, you move your money out of tax-deferred accounts while rates are still low. Now, let me break it down and show you how it works. So the first step is start withdrawing money strategically to stay in a lower tax bracket. The second step, shift those funds into tax-free investment vehicles. Now, I'll explain those next. The third step, reduce your taxable income over time instead of getting hit with a tax bomb later down the line. The goal? To pay your taxes while rates are low instead of waiting until they invariably go higher. Now, this isn't some loophole or tax trick. This is how smart investors protect their retirement. Okay, so if you're moving money out of a 401k or an IRA, where'd you put it? Well, here are two very powerful strategies. So, first of all, you can move your traditional 401k or your IRA funds into a Roth IRA. Pay taxes now while rates are low, and guess what? You'll never pay them again. The second strategy, slightly different, and this is where the wealthy really win. So instead of rolling funds into another taxable account, many high net worth individuals use max funded life insurance contracts, commonly known as laser funds. And these laser funds grow wealth, they access funds tax free, and they can pass on money to your heirs without taxes. So what this means is you never have to worry about RMDs, capital gains taxes, or the government changing the rules on your retirement. Now, maybe you're thinking, it's okay, I'll just rely on rental income instead. Well, here's another wake-up call. Capital gains taxes are set to rise. So selling your properties later could cost you way more in taxes. And also, property taxes themselves could increase. As government budgets tighten, states could hike property taxes, plus new rental regulations are coming. Now, if the leadership shifts, landlords could face stricter rent control, eviction bans, and profit caps. The bottom line? Well, if you're in real estate, you need to be thinking about tax strategy right now. Now, let me tell you about another client of mine, Sarah. Sarah had $950,000 in her 401k. She thought she was set, but what happened? Well, when we ran the numbers, she was on track to lose over $350,000 to taxes over her lifetime. So, with the help of a financial advisor, we got her on a strategic rollout plan. So, first, our financial advisor converted her to a Roth IRA over 5 years. Then, they shifted part of her funds into a laser fund for tax-free growth. And now she's set for life with zero, and I mean zero, tax worries. She didn't wait for the government to make the decision for her. She took control. So let's get real for a second. You've got a limited window of opportunity. Tax rates are at historic lows. The government is printing trillions, which means future tax hikes are inevitable. And if you don't take action now, you could be paying way more later down the line. The people who plan ahead win the game. The ones who wait, well, sadly, as you know, they get crushed by the system. So here's what I'd like you to do. First of all, make sure to like this video and subscribe so you don't miss any more game-changing financial strategies. And remember, your retirement savings belong to you, not the government, but only if you take action right now. So in the meantime, I'll see you guys in the next video. And while you're at it, have a great day. Take care.